Hi guys, welcome back to this new year of 2017. Alright, we've been missing in producing such videos and updates for you guys over the past 3 weeks, I suppose. Alright, since the late of December until the first week of January. But we are back right now. Right, sharing with you on a weekly basis, what are our insights into the market and some of the potential setups that you might also take if it fits your trading plan. Right, so for those who are new, and of course you stumble upon this video, I would like to welcome you. My name is Kayong and I'm currently running Alpha Play Forex Trading School, as a coach as well as a trader. So what we do over here is on a weekly basis, I'll be recording such videos to share with you my personal insights and certain opportunities that I'm paying a close attention to in the Forex market, and hopefully you'll be able to gain certain insights and perspective from us as well. Right, and for those who have been following us some time, wish you a happy new year and it will be a great year for all of us. Alright, so let's dive down into the Forex market and take a look as to what is some of the focus for this particular week, and for the remaining 3 days for this particular week, what can we trade out of in the market. Alright, so let's take a look. Alright, this week news wise, risk events wise is relatively quiet as compared to last week and of course next week as well. But we do have some important data that you need to take note of. Alright, today is Wednesday. UK will be in the limelight because we have manufacturing production later on, as well as BOE Governor Carney will be speaking. Right, later part of the day we have crude oil inventory. This will be interesting because later I'll talk about the oil as well. We do have a very nice opportunity moving forward, meaning today or even tomorrow. Thursday itself, the focus will then be President-elect Trump speaking. Right, this is definitely gonna move the US market in terms of equity, stock market, and of course the dollar index, as well as certain of the risk on, risk off environment playing out as well. Alright, and then of course Friday will be Fed Chair Yellen speaking. Alright, that's gonna be the focus as well, because we would like to, as traders, we would like to know moving forward into 2017, is the rate hike still on the table? Alright, because last year when they increased the interest rate, they did mention that in 2017 they are looking out for 3 more interest rate hike. Alright, so this is the focus for us, looking at the central bank from the Fed. Later part on Friday, we do have core retail sales and PPI. Alright, certainly important data to track as well. But relatively quiet for this week. Alright, so these are just some of the news to look out for. Alright, let's go into the chart right now. Alright, so first thing first, whenever we trade, we like to look at one of the most common index, which is the dollar index DXY. Alright, it's important because a lot of currency pairs that we are trading are based on the dollar as well. It's denominated in the US dollar. Alright, so the DXY or the dollar index actually gives us a very big and good understanding of how the dollar strength is, and that's definitely gonna be a technical bias for the major pairs that we're gonna be trading. Right, so I'll just bring you to broader time frame perspective on the daily time frame. What I'm looking out for, or what is my personal insights and opinion, is that we are currently expecting a retracement, right, from the recent strength on the dollar, right, and then we might potentially and very high chance see one more move towards the upside, targeting 106.20 area. Alright, but as of now, it's definitely in a correction for the dollar index, right, and that's why you later on, when I share with you on the major pairs, you see that there's a lot of major pairs. It's actually in a consolidation, right, simply because dollar index is also consolidating, right. But on a lower time frame, alright, we are looking out for one more move down to complete this entire 5-wave structure, and then that's where we can expect to be bullish for the dollar moving towards 106.20. Alright, so right now if you are looking to buy any of the majors, alright, that means buying into dollar, you might want to be slightly cautious, simply because we expect this move down first, right? Meaning we expect dollar to weaken slightly before another bullish sentiment coming in, right? What can be the catalyst for this? Of course, if you look into this week calendar, right, Donald Trump might be one of the catalysts to push the dollar index down, and of course, Yellen can be the the catalyst as well, alright, to move the dollar index. But this is just based on technical, based on the wave analysis. Alright, so you might want to have your own strategy to engage these trades as well. Alright, let's take a look into the euro dollar. Alright, you can see euro dollar is definitely in a consolidation, it's a range environment. What we're expecting is one more dip down, alright, not a lot. That's about just close to 80 pips move, alright, and then we still continue to expect it to bounce around. Alright, so that's why I personally will feel that it's not the best opportunity and best time to actually take trades on euro dollar, because it's gonna just bounce up and down, not going in any clear direction, alright. So I would suggest that if you have other opportunities, alright, just skip this pair, right, until we get a better confirmation. Alright, pound dollar, we did see a huge dip in where price fell, alright, earlier this week itself, and from here, because of this huge move, I'm expecting some form of deeper correction back towards the 50 towards 61.8 Fibonacci level. Right, and we're also seeing some form of divergence over here, right, at the bottom. So it all pulls and show me sign that it's gonna go a deeper retracement before any down move. Right, so as of now, if you are if you are still looking to short the pound dollar, right, again, be cautious, because this is also in line with expecting the dollar index to weaken first. Dollar yen on a H4 time frame. Alright, what we are looking out for is currently consolidating. Alright, it's currently doing what I call expanding correction. Alright, because after a huge rally late last year, alright, what we are seeing right now is currently just a retracement. Alright, and when this forms, I expect at least one more move towards the upside. Right, but actually, having said that, right, it's not the best level to take a buy opportunity right now. Right, simply wait for this to reach, alright, for price to reach this area around the 114.1, alright, and then if you see some sign that price is reversing towards the upside, that's the key, and that's the signal for you to take a long trade, right? And I'm expecting it to break above this high if it does reverse and go towards the upside. That means after it finishes its correction, right? So some more room for it to drop. Alright, from 115.90 currently where it is towards 114.1, that's about close to 200 pips. Alright, and this drop is in line with the dollar index sentiment as well. Alright, Aussie dollar, it'll be interesting to watch on this. This one, alright, I'm looking at a very nice ending diagonal structure forming, alright, with clear divergence happening as well, and you can see price has lost the momentum towards the upside. Alright, so I'm expecting price to terminate around the 7380 to 7405. That's about 30 pips range. It's pretty small. Right, I'm looking out for short opportunities around this area. Alright, so if you are able to catch this within this week, do take a look out for that as well. Alright, and I'm expecting at least a drop back towards 7295. Alright, pretty decent catch if you can capture this kind of trade. Kiwi dollar, it'll be slightly different from Aussie dollar because what is forming over here in terms of structure, right? It does show that, you know, price can still go higher back towards 7125, and you know, instead of following the direction of Aussie dollar, right, Kiwi dollar seems to go up higher. So right now I do not have any clear setups to take a buy, alright, but based on this wave analysis, I'm expecting one more move towards that area before that down move, right? But of course, price can easily break this as well, alright. So again, do not take this sharing as a trade call, but just giving you some insights as to how I analyze the market, and hopefully through this directional sharing, you'll be able to leverage on it and trade according to your own strats as well. Alright, for dollar Canadian, what I'm looking out for is this is definitely a corrective structure. Right, so I'm expecting price to move higher towards the end of this channel. The top of this channel, it will be a very decent short opportunity. Alright, looking for price to move back down towards at least this trend line, or if price breaks this, alright, we'll be going for the what I call the home run trade. Alright, because if price decides to break this over here, it can go down all the way. Alright, but if price decide to bounce off that trend line, alright, it might go up higher, and then we'll look for opportunities to short back up there. Alright, as of now, you can take a very low risk trade. Alright, if price comes up towards this top of the channel, take a short opportunity over here, your stops above the previous structure. you can actually aim for that home run trade, alright? If not, from this top of the channel to this bottom of the trend line, it's also a pretty decent trade because you can capture at least about 250 pips from that. Alright, so that's for dollar Canadian. Dollar Swiss franc is interesting to watch as well because I'm expecting, this is definitely a corrective structure, I'm expecting one more move, alright, and if price comes back up towards the 1.0220 level, it's a pretty low risk trade with a certain high reward, alright, so the risk to reward is really decent because my stop just needs to put above the 1.250 area, and I can target as low as 1.0042. Alright, so this one is again aligned with the overall dollar index, alright, we are expecting one more move towards the downside for the dollar index, and that can be the catalyst to push dollar franc towards this last move towards the downside. Alright, but if you look at the overall perspective on dollar franc, right, it's actually still in a range, and if I bring you back to euro dollar, it's very similar in what they are doing, okay, so they are all actually in a range environment. Just that right now I wouldn't be looking for opportunity to buy the euro here, right? Simply because the structure is not as clear as the dollar franc. Alright, so if you want to sell the dollar franc will obviously be a better opportunity because this structure is much clearer as compared to euro dollar. Alright, let me bring you to oil. Just now I mentioned earlier in this video that oil is very interesting with OPEC news coming in today. Alright, so OPEC news over here. Alright, crude oil inventory is expected to come in at 0.9. Alright, is way better than the negative number that came in previous month. So if it comes in better or even in line with 0.9, we might expect the oil prices to fall, alright, simply because we have a surplus in inventory, right, an increase from the previous month. But if the actual data come in less than the forecasted, right, and if it falls into the negative territory, oil prices might be rallying because you know, a shortage of supply. Basically, it's a supply and demand concept. From technical analysis perspective and wave analysis perspective, we are expecting some form of termination in terms of this down move around the 50.6 towards the 49.50 area. Alright, so this will be a key area to look out for buy opportunity, but of course we need some catalyst to push prices, and the catalyst can definitely come from the news, which is tonight crude oil inventory. Right, so my perspective is that it's gonna terminate here. The down move is probably high chance it's gonna terminate here, and we are expecting one move towards the upside. Alright, from a higher time frame perspective, oil has definitely broke the previous structure over here. Right, and we are expecting it to move as high as back up to 58.60. Right, so our long-term bias is definitely towards the upside. Right, and what we are looking out for is on a shorter time frame, can we look out for a trade opportunity to take it with a very low risk and very high reward ratio. Alright, so what I'm expecting this is do not enter your buy setup here, alright, wait for some form of confirmation. Your confirmation can come from a very bullish candle, alright, your confirmation can come from a double bottom and etc, alright, depending on what your strategy is to engage the trade, alright, but my bias or directional bias is actually towards the upside from here, right? I wouldn't be looking out for short opportunity because the reward is pretty small. Right, for gold, most of the traders are actually very interested in precious metal. Precious metal for gold, I wouldn't recommend you guys to actually long it right now, simply because the upside potential is very small as compared to, you know, taking a downside, that means a sell trade. Alright, on a higher time frame perspective, this is merely a correction as of now, right? Because you can see on the daily time frame is very clear that the overall strength is towards the downside. Okay, but yes, we are expecting the downside to terminate over here late last year in December, right? And you can see price did really turn from that. But it's not good to chase over price if you didn't long back there, alright, because right now the upside potential is very small, alright, so do not long as of now because the risk reward doesn't benefit you, right? But instead, if price comes up towards the 1195 or even 1198 area, alright, around 300 ticks, that will be a very decent opportunity and area for you to look for short opportunity to trade that correction back down, right? But of course, long term wise into 2017, oil is actually gold is actually moving towards the buy direction, okay, because after this strong up move, we expect some sort of retracement and then continue up there, Alright, from there all the way back up towards 1465, alright, potentially around up there. Right, so if you manage to get a long trade, long position, at least lower, alright, or even a very low risk kind of trade, it's actually advisable or even a very good opportunity for you to hold on to your long position, alright, going for the home run trade. So that's about it. I'm sharing with you in this video. I can't share with you all pairs because then the video will be super lengthy, right? But I'm sharing with you the major and common pairs that traders actually actively look out and trade them. Alright, so before I end this video, some of you might be asking, or especially those who have been following us some time, alright, would be interested to know, how come we shifted our forecasting analysis towards Elliott wave, alright, or I would say wave analysis. The reason is very simple because for the past 1 to 2 months, alright, late last year, we have been using this, and we have been sharing with some of our inner circle traders, and they have benefited hugely from the accuracy and precision in forecasting direction using wave theory. And many of them actually asked if we are going to launch either a class or even a course to actually teach you guys how to do it, right? And we decided that since the students asked for it, the traders asked for it, we actually designed a course, alright, and we're gonna launch it in late February, right? So this course is actually gonna be conducted first in Singapore, of course, physically over a classroom setting, but eventually we're gonna push it up into online setting as well, and then it's gonna benefit all traders around the world, right? Especially those who are following us from YouTube. I understand some of you might not be physically based in Singapore, right? So I'm gonna insert this link into this video as well. So we are gonna open up our first batch with a limited amount of seed, alright, simply because for the first batch we want to still gather some feedback, right, from you guys, and of course because of that we are also giving a promotional price for the first batch. Alright, so this workshop is gonna be conducted not only on one day, alright, but we split it into 2 sessions. Alright, one full day intensive workshop where we'll share with you everything that you need to know, the knowledge, the theory aspect, as well as some skill sets into forecasting using Elliott wave. And then we'll have another practical session in the evening during the live market session where you get to practice hands-on. Right? So the first intake will be launched, will be starting in 25th of February. Right? And of course you can read about all this the link later on when I share in the video. Right? The cost fee starting for the first batch will be at $497. Right? We believe that this is really value for money because it's definitely one of the very beneficial analysis forecasting technique that many traders actually use, alright, including bank traders and institutional prop fund traders, but very little people is able to actually share and train students into using the Elliott wave analysis, alright, and we are very confident that we have the ability to do that. Right, and that's why this pricing is actually very for money, and what we can share with you is the price is definitely going to be increased in the future as well. Right, so especially for those who are in Singapore, if you want to get hold of this opportunity to learn this technique, right, feel free to quickly grab the seats, alright, because we haven't decided what is the cap, but most likely it's going to be around 20 seats at most for the first batch. Alright. So we do have some case studies and such, alright, we are going to launch it on 25th of Feb. Right, so that's one, and of course, moving forward into 2017, alright, if you read our annual letter, I did share that we're going to be more active on TradingView, sharing on the major pairs, alright, so we had been doing that since the start of week 1. Alright, and again, all these are not trade calls, but if you would like to gain certain insights into how we do it, what are some of the direction that we are forecasting, alright, do follow me on TradingView. Alright, and whenever I post a new idea or update an idea, you'll be able to get the notification. Alright, so example like this would be, if you click into it, I usually update an idea on Tuesday. Alright, the idea will be posted on weekend. I'll update the first idea on Tuesday, and the second update will come on Thursday. Alright, so simply put, I would like to just share with you more, alright, based on this method, and hopefully you'll be able to benefit from it as well. Right, so other than that, I would like to wish everyone again happy 2017, and if you have any questions, alright, feel free to drop them under the comment section below in this video. And again, like and subscribe this video, and I hope to see you next week.